Hello everybody and welcome to this week's weekend update video. Before I go into the material I want to present to you, I just want to share a couple of resources you can have, or you can rather use, on my website. So if you go to tradethestocks.com, and this is for anybody, whether you are a day trader, swing trader, long-term investor, just somebody who wants to use technical analysis to improve his or her probabilities in trading. What you want to do is you want to go into tools and click on the markets and charts tool, and when you go in here you can actually pull up charts of some equities that you're interested in. And of course, when you're a trader and you want to increase your probabilities, what I highly recommend is to look at different time frames. So in this example we have one chart being a daily, the other one being a weekly. And so if you are a swing trader and you have one particular equity you're interested in, all you do is type in the symbol and you find your pattern on the daily, and then if that pattern confirms on the weekly, you have a much better probability of that working out in your favor. Now of course on the side what you see is a market overview, and it goes in real time. And also if you are a day trader and you pick on quick scalps, you can go back to as little as the 1 minute chart, and you can also draw trend lines, look at volume trends. So a lot of different things you can do. So by all means, tradethestocks.com and go to tools. The other thing you can use is the Fibonacci retracement calculator. Now I cannot emphasize enough how important Fibonacci levels are, at least for me and in my type of trading. So I tend to focus a lot on patterns, a lot on cycles, repetitive behaviors. I'm very much into harmonic trading and ABCDs and things like that, of that nature. But if you have Fibonacci levels in addition to some sort of a support level and you want to buy that stock as an example, your probabilities go up drastically. I find that every time I just have a support level, I only have about a 60% chance of that working out. But if that support level also happens to be a very strong Fibonacci, such as the 0.382 or the 0.618, then my chances tend to increase by 15%. So in terms of trading, just think about increasing your chances from 60 to 75%. I'll take that anytime, right? So Fibonacci levels, very important. If you want to use that, here's another tool you can also use on my website. Okay, now let's get back to business and what we actually want to talk about. Let me just give you a little bit of information since everything here is new and you might be a little bit confused. So what I do is I update everyone from Monday to Thursday with daily videos. So this is more for the shorter term trader, or maybe if you're just interested in education, somebody who day trades, somebody who swing trades on a shorter term. You can watch the Monday to Thursday videos. But then on the weekends, which is what we're doing now, I do a more detailed video, and I also do recap the past week, so you will get that aspect as well without losing any information. But in addition to that, I look at other things. For example, today we're going to look at some potential cycles that might be playing out, and these weekend videos are very informative for the longer term trader. So the longer term trader, what they want to do is they want to buy or sell a stock and then just forget about it, right? And so I think doing a weekend video is very reasonable for you guys. That way you don't have to sit by the computer every evening, and you can just enjoy it, for example, on a Sunday evening. Very doable. And of course, if you're a day trader, short-term swing trader, just for educational purposes, very informative, and also to get ready for next week. Now, what I want to do today, as I said, I want to look at some potential cycles. And again, going into the longer term, trying to predict the longer term is obviously highly speculative. So it's going to be different, versus me telling you what might happen this following Monday, right? So I have a greater chance of predicting what the market is going to do this Monday versus what it's going to be on any given Monday in a year, correct? But nonetheless, what I want to do is I want to go into some potential cycles that might be playing out. And I know a lot of people are looking at the 10 years, 30 years, and there is some validity. There is a little bit of repetition in what we've been seeing in those longer term cycles. But I also want to focus on these shorter term cycles because I think a lot of people, a lot of traders forget about those. Everybody wants to find that big reversal, and everybody thinks that big reversal is going to come from this larger time frame. I've seen reports recently comparing this year to 1929 and the big crash, and that's all great, but you have to be very careful, when you make a claim that today's market is looking like 1929. Um, you want to be very careful as a trader if you really want to make that statement or not. Even if you're right, even if your technical analysis is dead on, it's a very dangerous path to walk on. So what I personally like to do is, yes, I like to acknowledge those longer term trends, and there is some truth to that. A lot of those reports are very, very impressive, but I also like to look at the shorter term time frames because I think a lot of people ignore those. A lot of people think, well, if I go back a year, it's just seasonality, it doesn't matter. But then I could also argue, well, if you go back 2 years, exactly 24 months ago, if you go back to 2012, 2013, the charts didn't look like this at all, right? And with that said, I want to look at first the 12-month cycle. So let's go back to exactly a year ago. So we're kind of doing an on this date analysis from 2013 into 2014. So right now, what's going on in the markets is we put in a low in October. We had a very big rally. Then at the beginning of December, it looked like we were going to have this abnormal sell-off, which in December you really don't expect it. You expect a Christmas rally. But what happened, of course, people's money got taken, and then when they thought, okay, finally when they caught on to this, their money got taken again, right? Because they were sure. That's how the market goes. The market tries to convince you of something, and then finally when you think that you're on board, then it does the complete reversal, right? So nonetheless, what we had is we did have this Christmas rally after all. So we had a rally from October into the end of November. Then we had a little bit of a hiccup in early December. We did have our Christmas rally. And then in January, we've been chopping sideways. So it was a great day trading environment. It was a horrible options trading environment. But hey, that's how the market goes. You have to take it one step at a time. You can't do everything all the time because the market may not be favorable for you. But nonetheless, what we've been doing, and again, this is if you watch the daily analysis videos, and I know I'm getting repetitive if you watch every single video, but the truth is that right now we are into a downsloping resistance line. And again, go back to my videos and watch this. On Thursday, we broke above it. And I said, well, okay, that's all great. We broke above it, but now the market has to prove itself. And then on Friday, what happened is the market gave a little bit of it back. Nothing too dangerous, nothing too bad. And remember also what I said in that last pre-market, don't trade in the afternoon. If you trade in the afternoon, the last couple of Fridays, we've been having a sell-off late in the afternoon because a lot of people didn't want to hold into the weekend. So I hope that you took that advice if you were long into the end of a day on Friday and you didn't get stopped out. You weren't lucky at all. But anyway, I digress. So January we had a lot of choppiness, and you might argue we put in a little bit of a low on the second. So now the question is this low going to hold and we rally up, or are we going to reverse at some point and take it out and go even lower in a fast and furious manner? So with that being said, let's compare that to last year. So we'll go from October 2013 to February 2014, and that is the blue chart underneath. So if we compare the two, you can just tell that the pattern is very similar, right? I mean, it's never going to be exact, but very similar in terms of dates and somewhat in terms of the pattern as well. But the dates are the ones. So when we're doing cycle work, we focus more on the days, right? We want to look at the dates, and the pattern may not be exact. So if the date tells us there's a reversal, how it gets into that reversal might be different, but that date is very important. So what we saw from a year ago is that on the 9th of October we put in a low right here. We put in a low, and then we rallied, right? What did we do this year? We put in a low on the 15th of October, and then we rallied, and a lot of people were thinking as we started selling off here, oh my goodness, we're not going to get our Christmas rally. We started to sell, right? Maybe that Christmas rally was the October to November. So what happened a year ago if we compare it? Well, people were probably pretty much saying the same thing because we had this huge rally mid-October to November, and then as we started December, we kind of did the same thing. We started a little bit of selling, and I can imagine when we were tagging this 50 moving average, at least at the time when we put in this low, I'm sure a lot of people were saying, oh, we're not going to get that Christmas rally, right? So history tends to repeat itself. It wasn't as volatile as it was this year, but nonetheless, we put in a low on the 18th of December. We tagged this 50 moving average, whereas the most recent chart, so now we're looking at 2014, we put in a low on the 16th, and then we rallied. Notice how the timing is very similar, right? So now we go up, we take out, we make a new all-time high on the SPY, right? Um, and this happens within about 8 or so days. Same thing happened a year ago, so a year before that. So from the 18th of December, we go and we put in an all-time high on the 31st of December in 2013. What did we do last year in 2014? We put in an all-time high on the 29th. So very similar pattern. And then what happened? Well, we had that a little bit of a sell-off and then a little bit of choppiness, which we're coming into now. So that's occurring right now. And then we put in, if you can argue that this is a low, we put in a low on the 2nd of February last Monday, essentially. And if you go back a year ago, you will know that January was actually a lot more violent, right? So I'd rather take the January we had recently than the January we had a year ago. So what we ended up having here is a major sell-off. Not a major sell-off. Let's say pullback. I don't want to make it too dramatic, but we had a pullback here. But the dates are the ones that are important, and we put in a low around this 3rd area, maybe the 5th. Let me see here. The 5th, the low was 37.92, and here the low was 39.66. So they're very similar, but nonetheless, around this area we put in a low. And it's interesting how if you go back recently, we did have a low on the 29th of January, right? And then 2 days later, we had a lower low, but just slightly. The wick was just slightly lower, and we had a very similar situation a year ago. So for now, it looks like it's a very similar pattern, at least within that time frame. If it holds, what this is suggesting, just at least based on this, is this is suggesting that we might have a rally and make yet another all-time high. So whether that holds or not, I'm not sure, but nonetheless, just by looking at the patterns and at least by looking at the time, it appears that we might chop a little bit into this area right here, which is that all-time high, and then just go up a little bit more. And then of course the question is, how much higher is the market gonna go? And if I tell you, well, okay, right now we are at 2055.47 and the market goes to 2500, you're gonna say you're crazy, right? Because I would say the same thing about me. But when you are trading, you just have to look at the charts, what the charts are telling you. If the charts are telling you that something is going to double in a year, then you have to believe it. And if the charts are telling you that something is going to be cut in half within a year, you also have to go with that versus your emotion. That's what I'm saying. You don't necessarily have to believe it, because you have to manage your risk, but I'm saying versus your emotion, that is what you want to rely on. And just to that effect, let me bring in the monthly chart of the SPY. So now we're going back and looking at the broader term, looking at decades of this chart. So I'm sure a lot of people, since we were uh, trading in this range right here, I'm sure a lot of people, when we got to this triple top right here, said, that's it, we are gonna sell off. I am 100% sure I'm going to short this market. And then they shorted the market, went higher and higher, and they said, well, it can't go further than that, right? That's what they say. It can't really go much higher than that. I mean, look at all these big events. Look at the dot-com bubble we had. Look at the housing bubble we had. The economy isn't all that great. It has to come back. And then what happened? It rallied higher and higher and higher, and they lost all their money. And so with the market, you just have to be very adaptable. All you can really do is just have a stop. There's there's nothing about it. I mean, I know when I was starting to trade, and of course everybody makes these mistakes. It's not just me, it's not just you. But when I was starting to trade, I would have a lot of great days, very disciplined, very proud of myself. And then there would be that one day when I do something silly like this, where I would try to justify my trade and say, well, the economy is bad, or President such and such is going to be on television. He is gonna. I'm sure he's gonna take the market up. And you come up with all these excuses, but that's not what matters. What matters are the numbers. And so if a chart is going against you, you're gonna lose a ton of money. And then after that happens, of course, I would lose everything I made in a longer time, right? In a whole month, and I would lose it in a week. And then, of course, you would get very emotional, and then you start questioning yourself, what's wrong with me? And you just get very philosophical on yourself. You think that there's something bigger than you, that, you start thinking about all these things. But trading is very simple. You either do or you don't. I mean, that's what I learned. You either take your stop or you don't, and you never look back. And that's all it is. And trading is just an accumulation of trades that are slightly better than your losing trades. And that's all it is. You're not going to have one trade where you gain 200% of your account, unless you're crazy and you risk everything, right? So it's an accumulation of trades that are slightly better than your losers. And you just have to find a technique that's going to allow you to have 100, 200, 300 trades, so you have a larger sample number where you can show yourself that just slightly your winning trades are better than your losing trades. So in other words, if every day on a winning day I gain $500, but on a losing day I lose 450, and my percentage winning rate is so that I don't really have a lot of losing trades, losing days, maybe only 1 day of the week is a losing trade, and then 4 days are winning trades, then I'm golden, right? I'm still gonna make money. So that's all it is. Just do your own math. But anyway, I digress. So the point is that just because something becomes unrealistic in your mind doesn't mean that the market also thinks the same. So the market, if it wanted to, it can go up to 3,000 right now. It can also sell off, and within 2 months we could go down to 1,500. So all of that possible. For us, all we want to do is increase our chances. But anyway, so we'll get back to this big chart. It's actually part of what I planned to discuss today. But for right now, we were looking at the 1 year chart. So the 1 year chart, or the 1 year cycle, is showing us that there might be potentially a similarity. And based on this, if this holds, then there's going to be a rally. And this low right here on the 2nd of February would also prove to be the low that would eventually, the market would bounce off of it and we would see a similar rally. Now, I will say though that the moving averages have to also participate here. The 200 moving average, which is the red line, that one's doing okay. That one's working just fine. But the 50 and 20 are going to have to reverse higher if this is going to be true. Okay? So that's that one. So we looked at the 12-month cycle. We compared the two. Now there's also another cycle that is also very similar. And usually I don't use this one because I don't consider it a cycle, but you never know with the markets. And that is the 8-month cycle. So let me pull up the charts and show you that. So again, the blue screen is going back 8 months in time, and the white screen is what we have going on now. And just looking at the pattern, you can see a lot of similarity. So if we go back to our October low of 2014, which is around October 15th, we had a rally right into December. And if you go back 8 months and you go from February 2014 through April 2014, within the same time frame, you had a rally. Now, granted, in 2014, these rallies were a little bit more subdued, but nonetheless, as far as the pattern is concerned, there's a lot of familiarity. And notice how there are a lot of similarities as well. And then we had this uptrend, and then we chopped sideways for a bit and sold off a little bit. We retraced about 40% of that move. So very similar also within the time frame, very similar. It happened within about 2 months. The next thing that happened is starting in April 2014 through the end of May, for a period of about 6 weeks, we had a move that's very similar to what we've been seeing in the last 6 weeks as of now. And so you had, as soon as this leg down was completed, you had one leg up, okay? Now again, it's weaker because this time we didn't take on a new all-time high, but nonetheless the pattern is very similar. You had 3 small legs up, then you could argue this is more of a pullback than a leg down, but nonetheless 3 times up, 3 times down. That's exactly what we're seeing now. 3 times up, right? And 3 times down. Now we are going up, and so the question is, are we in this rally right here? If that pattern is true, then it means that we are only into starting to make this leg up, and therefore we would have some more upside. And again, just FYI, going back, just how similar this pattern is. So we started from the October lows and saw this similarity. Just going back, if you look back here on this move, right, we had a move right here in August 2014. We went up, retraced a little bit, went up again, took on another all-time high, and then we went down, based a little bit sideways, and sold off. Okay, put in a low. Same thing here. What did we do? We went up, little bit of a pullback, up, little bit of a pullback. Notice how it happened twice, just like here. Then we went down again, also based sideways, went down, made a low. Okay, also looking back at this area right here, isn't it very similar? You had a leg up on momentum, then you based sideways a little bit, started putting in higher highs, but you were essentially in a range, and then that final leg down, that little bit of a pullback that was stronger than the rest, right? Very similar to what we're seeing here. Now this area is a little bit of an anomaly, so not very similar there, but nonetheless I think the results are very similar in terms of where you opened in this area and where you closed. If you go back again to this area, notice here we had a very similar scenario. A big move up, then we retraced a little bit, retraced again, and then the third time was a little bit stronger. Same thing here, leg up, retrace, retrace, and then it went down a little bit. Again, this area here also an up move, here as well, leg down, basing sideways, leg down. Okay, same thing here, leg down, based maybe a little bit higher, but nonetheless it based and then it went down. So a lot of this pattern here has a very strange similarity, more similar than actually the 12-month period that I showed you as our first example. So just by looking at these moves and trying to find these common areas, so by looking at these different similarities, the question arises, are we also going to see similarities in the future? So if you do some calculations and you try to project a possible price target, at least in the near term, on the SPY or the SPX, what you see is that it is possible. And again, this is based on looking at two different patterns. What I initially see, and again, if this happens, it's a big if, that there might be two potential targets on the S&P. One of them is the 2,140. So that might be the first target, or at least some resistance. And the other one, again, this is a range, is the 2,200 to 2,240 area. So again, we'll see if it even gets there into that level. As I said, as of now, at least looking at the charts still haven't proven themselves to us. So we are still in this sideways range, and so the question is, do we move higher? Okay, do we move higher from this February 2nd low? Do we move higher, at least into 2140 at minimum? Okay, maybe even higher. Or do we at some point sell off? Maybe the market just slightly takes out the top, maybe it gets a little bit of juice, and then we see a violent move down. So again, just because a pattern has been repeating for a long time doesn't mean that it's going to do that indefinitely. So at some point this pattern is going to have to break. But again, based on what I'm seeing, it's very impressive that a lot of this has been repeating. And so unless we see some sort of change of character, we have to give this pattern its own due diligence. So we have to say, well, okay, for now we're going to stick to it, and we're going to assume that the pattern continues unless it proves itself otherwise. Now, in terms of the larger trend cycles, and let me pull out that chart that we were looking at initially. Now the question here is there going to be some repetition here? Now of course with this it's a lot harder to figure out because this is more simplistic if you just look at the monthly. But if you just were to project out, for example, this move right here, and I do want to stress the importance of this, if you want to project this move onto the recent low, which is this little bit of a pivot right here, it's actually telling us that we're right into resistance. We are right into resistance right now. And so we'll see, it will be very interesting to at least watch this market to see what it's going to show us. The more detailed analysis shows us that there is some more upside, and that we might even have a breakout move. But this monthly analysis tells us that we're actually into some resistance now. So again, these are some potential cycles, and if you want to go back and review, what we were looking at was the exact dates 12 months ago. Then we went back about 8.5 months ago, and then what I've been talking about on the larger scale is about 7 years, maybe a little bit more. But that's what I'm seeing on the charts. So again, very interesting to find out what the market is going to do next. Now, I also want to mention in terms of timing, let me just, so we're done with these other charts for comparison purpose. Excuse me. So what we have here is a little bit of a pivot point that might be happening soon, and and this is more based on time rather than the patterns. But what I'm seeing is that actually next week might be a very important time. Now, whether or not that plays out, I'm not sure. Nothing is 100%. But I'm seeing the February 11th through 13th, although I'm leaning more towards February 11th and 12th, but the 13th could also happen. So next Wednesday through Friday, I think is going to be a very important time in the markets. So I don't know what that could mean, whether it might mean that into that time we actually hit this resistance, which is this upper part of the channel, or maybe we go back to the all-time highs and we hit the double top, and then afterwards we sell off. So there is a likelihood that at least in the near term, around that date, around February 11th through the 13th, we might be having some sort of a key event, whether that is in the charts or something in the news, I'm not sure, but I'm seeing that. Now, of course, that may also be wrong, because a lot of times these calculations, they can go both ways. And if that doesn't happen, if the market just grinds higher, doesn't give us anything spectacular there, then the next area would be the 24th of February through the February the 28th. So there's two potential time frames that I have penciled in. I'm not sure what we can expect then, but we'll see how the market plays out. One of them is, I'm thinking, probably February 11th through 12th, and then there's also February 24th through February 28th. So I don't know if those are going to be key reversals, or if we're going to gain some special momentum, or some sort of a event happens in the world. I'm not sure what that is, but just keep those in mind. It is possible, and again possible, that we might have something interesting going on in the charts at those particular dates. Now let's go to the SPY. So let's look at the actual ETF. So this is if you're actually actively trading it, and we'll just add on to the story that we've been narrating for the last week or so. So again, as I mentioned, and again you can superimpose this on the actual index as well. What we're seeing is we're seeing this trend line right here as resistance, this purple trend line. And on Thursday we had a very impressive move higher. And again, the idea was, okay, well, we moved up higher, but watch out, because the market has to prove itself. And so far so good. Yes, we did have a negative day on Friday, but I think a lot of it was based on people just being used to selling on Friday. So we've been seeing these sell-offs on Friday late afternoon, and as I already said in my pre-market analysis, after about 1 p.m. watch out in the markets, because we just don't know what's going to happen. We've been seeing sell-offs, and sure enough, that's what we got. But I must say, it wasn't anything as volatile as what we've been seeing recently. So while it does tell us that there's still fear in the markets, it's telling us that it's actually subsiding. So look at it any way you want to. There's many ways to interpret that, but that's what the charts are showing us. But ultimately, if this is going to be a bullish move, it needs to prove itself. So far so good. We had a little bit of a pullback. This was just a minor candle. It didn't take out the green candle. And even if it does, right, as long as you're trading above this purple trend line, and if you are in bullish territory, you're still good. Okay, if you do get below it, then we'll start assessing whether this is going to be a failed move, and then we sell off from there. But that's what we have. And then if in case that happens, you have some minor support right here on the blue trend line, and we'll go from there. You also have a little bit of a 618 right here at the 198 60, 70 area. But again, these are all minor supports, and so in case we start going down, I cannot say with a great, a big degree of confidence that we're going to stay higher, or at least stay at the support. And therefore, there is a possibility, if we do reverse, that we go down lower, much lower, very fast. But that's what I'm seeing for now. So if you're trading the SPY and you're bullish, so far so good. But let the market prove itself. Like I said, right now is a great time for day trading. So if you're a day trader, it's a great time. It's not so much a good time for swings. I know a lot of people have been asking me, are you going to put out some of your swings? We want to know what you're trading. But honestly, I'm not really trading much because this market is not showing me anything definitive. Why would I go long, right? Just because the market broke above this area when it still hasn't proven itself. And then you could also argue, well, you might be chasing up here. Why didn't you buy it at the low? And then also you don't want to short it. Why? Well, the market has fended off this support area right here, and so we're a little bit in no man's land right now. So sit tight. Don't rush into any trades. If you're options trading, boy, you don't really want to be trading options now unless you're really, really careful. Uh, we just don't have a very definitive pattern for options trading. Of course, every day that goes by in options, you're losing out on your premium. So just be careful there. Now, I know that we put out a gold trade, which didn't get tagged, okay? But a lot of people were asking me, well, what about gold? What are we going to do about gold? So let's take a look at the GLD, which is that alert that I still have out. It hasn't been filled. So let's assess what's going on with gold. So remember, if you watched the video on gold, I was talking about the commitment of traders report. And of course, now being Sunday, there has been an update. And let me pull that chart up for you. So here is our commitment of traders report showing us the commercials, and that's really what we're interested in. We're interested in the commercials, the purple lines, meaning the actual miners and whoever is involved in this, and whoever knows what's going on with gold. And so you would have to add on this extra candle right here, because that's new information we have now. And go back and read all about, or listen to me about commitment of traders. I'm not going to talk about it now. I don't want to repeat myself. But what we're seeing is that we are still holding that high level of shorting in the commercials. We have subsided a little bit, but this is negligible. So they're still shorting gold. And like I said, they haven't done that in the past 12 months. And so again, if everybody's thinking that the market is going to go down, if everybody's thinking that now you need to be scared, you need to put your money into gold, well, why are they shorting gold? So ultimately, they're thinking that gold is going to go down versus up. Therefore, they're betting that the volatility is going to go down, and they're actually betting that the market is going to go back up, right? And then, of course, the dollar would follow the same. So they're betting on that, on more probably foreign investments in the dollar and all those things. But they're net short the gold contracts like they haven't been in a whole year, and that's very interesting. Now, if we go to the trade alert, and let's go back and review what I initially wanted to do. And sometimes your level doesn't have to be tagged. I mean, you have to be very disciplined as a trader. You don't want to chase any charts, and so I'm happy that at least we were correct on the trade, right? And again, with the volatility we've been seeing, I wanted to be more conservative, and I know maybe if I was alone and I was taking this trade, I would go ahead and probably take it right here, because this was technically a good area. But I feel this responsibility, when I have some people asking me these questions. Now, of course, you all have to do your own diligence. I'm not giving any advice or whatsoever. This is just for educational purposes. But I feel that sometimes I have to be more conservative. And so if the levels don't get tagged, I think this is also beneficial. um, at least it protects your capital. But nonetheless, the trade is still valid. So if gold by any chance reverses higher, and we see some more volatility, the trade is still valid. The only thing is that you would have to look at these downsloping levels. And so, but of course, I will update you guys. So I'm not gonna leave you hanging. The trade alert will be updated. But right now, there's no need for that because gold has gapped down on Friday, and so it's really nice to see that at least we were correct on the direction. And you put your technical analysis together, you look at the charts, you look at these different trend lines, the Fibonacci levels, and then you put it together with reports like the commitment of traders, and quite frankly, you have a very good trade in that case. It just, in this case, it didn't get tagged. But we'll see if by any chance it reverses higher. We'll assess when the time is right. Now, I know a lot of you also want to know about gold, or excuse me, about oil. And I hate to disappoint you. I know we've had a very good move up in oil, but I don't think it's going to be very sustainable. I think it's going to be a short-lived event. And I know, again, this is us using reasoning and saying, well, it's been down, right, 40-50% in a year or so, or however long it took it to get down. But nonetheless, it's been going down for years. That is no indicator of anything, right? Just because oil went down from 100 to 50 doesn't mean that it's not going to go down from 50 to 25. Okay. For all I care about, it could go down to 0. Okay. Now, very unlikely, but you have to have that kind of mindset as a trader. But ultimately, I think for now we're actually good on oil. So we'll see where it goes from there. And again, I'm looking at the USO, so you can look at your crude oil charts to just to assess it as well. But I'm thinking around this area right here will serve as some major resistance if it gets there. But as you can see, there's not really much more upside. Um, and even if oil does decide to go higher, I think just based on what's been going on, it's going to have to base a long time along these levels right here. And I think that level is probably around the 58 to 60 area. But again, don't quote me on it. Look at your own charts. I'm looking at the USO because that's what I trade. I don't trade the crude. Um, so look at that, but honestly, I don't think it's going to get higher. Hopefully, I'm wrong. I would like to be wrong because I'll be honest with you, with what's going on with oil, it's making it very hard to trade, right? So it's affecting all these other things in the markets. And if it could calm down, at least start trading sideways, I would be much happier as a trader because then I can get that out of the way and then work on what I need to work on my own charts. But again, let's take it one day at a time. Thank you for watching the weekend analysis. And if you are a day trader, I will be posting before the market opens on Monday. I will be posting some key levels on the SPY, on the DIA, and on the Qs. Okay, so some support and resistance levels, along with a short commentary of where I think the market is going. Now, just to quickly recap today, and this won't last more than a minute. So if we go to the intraday on the 10-minute chart, in that report, at least the pre-market report from Friday morning, I said, well, I expect some sort of a downside. Again, the stochastics and the indicators were showing me some sort of downside. I thought that that downside would probably be a gap down at the open due to the jobs market report, and then that we would fade higher. But we kind of had the opposite thing. We actually gapped up in the morning, and then we had that Friday, I don't want to say sell-off, but we did have, we kind of gave most of our gains. And I think this is just mostly people, retail traders, there wasn't really a lot of juice behind this. Volume wasn't there compared to some of the other Fridays and the kind of volume that we've had in these late Friday sell-offs. There really wasn't a lot of volume, so I don't think there's much to this downside move on Friday afternoon. But again, I could be wrong, so we'll take it one step at a time. For now, the market is favoring the bullish side. If you are a bear, of course, protect your trade. You don't want to just watch your trade go higher and higher and you're bearish, okay? And if you are bullish, of course, protect your profits. You're already up substantially. Take some off the table and then let the rest run. If we see some more upside, if we tag the all-time high yet again, take off some of it again. Take off 25% of your portfolio and then again keep it running. That's what I did on copper on Friday. I bought a full position on the Freeport Mac, about 5,000 shares, and then as it was going higher, I exited 50% of my trade and then 25% of my trade and then the rest of it. So don't get caught up on commission fees uh, because you want to protect your trade. So if you have to pay an extra $7 in order to make 100, that's okay. By all means, don't at least as a beginner, don't pay too much attention to commissions. Okay, so that's what we have. And again, watch out for that pre-market report on Monday. Hopefully, I will have that up for everybody before 9 a.m. Enjoy your Sunday, guys.